In this video, I'm going to show you how to value real estate using a tool that I learned from millionaire investors who evaluate real estate prices and calculate whether real estate is overvalued, undervalued, or fair value. This is important because it will take away the fear of missing out that we often fear if you ground your reason for buying based off fundamentals and not based off your emotions. So anyway, let's get right into this and I will show you exactly what this calculation is. So first of all, we'll start off in Calgary with this listing to calculate it. So this listing here is listed at $735,000. It's in Airdrie, which is a town outside Calgary. What we're going to do is we're also going to look at a rental, and this is important. You'll need to do this. So you'll need to find a comparable rental. So I've got this 4-bedroom detached house in Airdrie, brand new, exactly like that house we just looked at, which rents out for this. So you want to take that number, 2,895, and multiply it by 12, and you will get a number here, which is 12 months rent, essentially. What you're then going to do is you're going to take this and you're going to put it into the percentage calculator. So the percentage calculator, as you see, I've already put in the numbers. You can see it's come out to 4.72%. Now that is essentially the yield, and that's what I'll refer to as the yield. So why is that important to calculate it in this way? Number one, it's grounded in fundamentals. Because you're using rents to estimate the value, that is grounded in fundamentals, because if you have to rent it out, that's an important measure to know, even if you're buying the home. And not only that, it's really good because rents are grounded to people's incomes. They are not able to go up to infinity. So it's a really good way of valuing real estate. Let's get on to another example, and then we'll get on to the percentages and everything like that, so you understand where these numbers fall, what's a bubble, what's overvalued, what's good value. We'll get into all that stuff. So we're going to move on now, and we're going over to Mississauga. So this is in Mississauga. It's a rental, whole house. It's about 1,700 square feet, and it's $3,950. So once again, we'll take the rent here and we will multiply it by 12. Really easy. We get that number, 47,400 there. And then if we flip over, I found this house, which is 1.3333 million. And yeah, million. It's just absolutely crazy, the bubble in Canada. So if you take that 47,400, we go to the percentage calculator again. So we take the 47,400 and then we take the 13333 and put it in there. You can see that the yield comes out to be 3.55%. That's absolutely awful. If you think about it right now, guys, 3.55% would not even cover the mortgage. If you were mortgaging that house, you're paying at least 5%. So we know just from that number that you're underwater. And this is another reason why it's such a good strategy to use this. You can literally use things like the mortgage rate, and you can calculate really simply and easily whether it's going to cash flow, it's cash flow negative, positive, whether it's a good investment or not, compared to investing in stocks or bonds or whatever it is that you're investing in. So it's important. So last but not least, we will go over to Vancouver, which is in a ridiculous bubble, as many of you know, and you can see this house is actually listed for $1.748 million. I know, it's absolutely crazy. And then we've got a rental here that is $4,500 a month. Who can afford that? So anyway, we will take the rent there and we will put it in. So it's $54,000. So we head over to the percentage calculator here. We put in $54,000 and then we're going to put in $1.748 million in here. So this is the yield you get. We get a 3% yield. That's what you can see on my screen right there. No, that is not a joke. 3%. Considering, guys, the risk-free rate right now is at 5%. It is utterly hilarious that anybody is considering investing in real estate in Canada. And that is how we're able to call these people speculators and not investors, because obviously they're banking on future price growth, which is always the case in large bubbles like we have in Canada. They're not actually using it as an investment vehicle, even if in their heads they think they're investors and they think that they're using it as an investment vehicle, we know that's not the case by doing these simple calculations. And the funny thing is, guys, it doesn't matter, because if you go across the country and you go to places like Calgary, like we just did, sure, the yield gets a little bit higher, but they all fall between that 3 to 5% range, which is extreme bubble. And that is extremely overvalued. You would never want to buy in that 0 to 5% range. Think about it. Mortgage rates right now around 5%. You've also got 2% maintenance. You're already at 7%. So you are miles upside down, even if you're buying a property in Calgary. So it just goes to show how we're in bubbles across the nation. And I've done this for Halifax. I've done this for other places. And you cannot find anything. It's very difficult to find anything which is actually above 5%. And obviously, if you're doing condos or apartments, you have to factor in the condo fee to your calculation. And I would do that by just multiplying it by 12. And then again, you're going to get a percentage of the purchase price that the condo fee is, but it'll be around that 2 to 3% range. So it goes to show how ludicrous it is right now. But anyway, I want to give you the brackets so you have them. This is really important. So write this down. You've got 0 to 5%. That is extremely overvalued. That is a really extreme version of a bubble like we have in Canada right now. However, like I said, if you've got a townhouse or a condo, you need to factor in the condo fee and take it off that percentage to use these values that I'm talking about here. 5 to 10% is overvalued. Again, let's say that you're buying a property and it yields 6% and it's in Calgary. You've got to pay 2% maintenance on that, and you're going to be stretched very thin after you pay your property taxes. You're probably just going to be at break even. So 5 to 10% again is overvalued. 10 to 15% is fair value. 15 to 20% is undervalued, and above 20% is extremely undervalued. Now, I've been around a lot of different places over the past couple of years exploring real estate opportunities, and I can tell you that getting a property between 10 and 15% is very easy to do. In fact, you can even do that in the United States still to this day. Getting a property between 15 to 20%, that's a little more difficult. And getting a property above 20%, well, I've only managed to find a couple of countries where you can do that, and one is Colombia. And you have to also factor in, guys, that you cannot buy a house in a TFSA in Canada. And what I mean by that is if you're buying an investment property, that yield, you probably have to take 20 to 40% off for taxes. So it is absolutely crazy, guys. It is utterly insane, the bubble that we're in. And if you use this measure, it is going to take the FOMO out of purchasing a home. You're going to be able to see that it is a miserably poor investment in Canada unless you manage to find some diamond in the rough, which certainly could be possible somewhere. Like I said, I didn't come up with it. I just simplified it. You'll hear people like Jason Hartman, George Gammon refer to it as the RV ratio. I just call it a yield, but it's essentially using the same measures that they use there. So anyway, I really hope this video had some value for you. If it did, then please leave me a comment below with what you thought. You can use this tool whether you're buying a property to live in it, whether you're buying a property to rent it out. I mean, if you're buying it to rent it out, then you need the numbers to work. But most people, they don't even calculate the numbers in Canada because, like I said, they're banking on future price growth and they're speculators. They're not investors. So anyway, thank you so much for watching. If you've enjoyed this video, you might want to check out this video here, which is about buying treasuries as a foreigner, earning risk-free money. And if you're looking for a VPN to get around Trudeau's censorship laws that are even affecting this channel, unfortunately, go to expressvpn.com/market mania. I will see you in the next one.